Boom. We are live, ladies and gentlemen. Very exciting conversation for you this evening. Always running down our interests in venture capital, financial technology, and the people behind and in front of some of this stuff. We have Sid Powell, ladies and gentlemen, one of the co-founders and CEO of Maple Finance. We had such a great starting to this conversation. Sid, welcome to the show. How are you doing so far?
I'm really good, really good. Thanks for having me on.
Yeah, it's a pleasure. I'm glad. The last time we chatted was, I believe, back in August. I still think what you're doing is just as interesting, no matter where we are in the market. We cut right in the beginning. Now we're pretty much right in the middle. And we like to stay updated. This is a big learning process for me. I'm not super technically savvy, but a lot of the conceptual stuff I see. So why don't you start by telling us a little bit about Maple Finance? And yeah, let's go with that.
Yeah, sounds good. So Maple Finance is a crypto capital market. So really our mission is to expand the digital economy through corporate credit creation. What we've built with Maple is a decentralized protocol, which allows institutions to access under-collateralized borrowing through the Ethereum blockchain. So we're really focused on supporting those institutions that are within the crypto space to grow.
Nice. So, when I'm looking at some of this stuff, I was jumping around your website. I had a little primer that we were working on. We like to write stuff as well. And a lot of the traditional financial system is kind of oblique or opaque to people. It's one of the things that blockchain does quite well. It shows us these transactions. Now, you want to give us an example of how large the lending markets are and applications of like lending and loans via platforms? Like where does this stuff go?
Yeah, that's a really good question. So I'd say, overall, the corporate credit market or corporate lending market is, in the hundreds of billions to trillions of dollars. But perhaps if we zoom in, so that's where things could go eventually. But if we zoom into where things are in the crypto space at the moment, one of the largest digital asset lenders in the space, just in Q1 alone, did about 20 billion in loan originations. So that's one. There's more than half a dozen. So you would say that probably within the space at the moment, we're annualizing to more than a couple of 100 billion just in the crypto lending space. So I think that's pretty exciting. And for context, that Q1 was more than a number of them had done, in their cumulative history to date. So this is a space that's really taking off at the moment.
Yeah, it's a productive financial system has got to be extremely attractive to anyone that's paying attention from the traditional markets, because there's a level of friction that's removed from the smart contract layer. Like, if you've ever set up a corporation or a trust or a foundation or any number of business entities and bank accounts, the complexities, like they always talk about, this kind of a side rant, but talking about the amount of energy that goes into making Bitcoin. It's like, how much time it takes to do all that, like the amount of human energy, the food that needs to be, like all that, like everything that goes into the people to make that shit happen. It's like, it is totally understated. So now, because we have such a productive financial ecosystem growing on all these different layer one solutions, and we see, there's a lot of migration. People are choosing a lot of the places that are cheaper. As a blockchain company, is there a level of agnosticism to the way code is built at Maple? Yeah, I'll leave it at that.
Yeah, no, it's a good question. So certainly, Maple is operating on layer one Ethereum. Now we would look at certain scaling solutions because it's obviously important for us to, be able to provide a good experience and one that's not expensive for people to use. And this is particularly on the lending side of our marketplace, where we're giving people within the crypto community a way to earn yield through depositing into the platform. But I would say philosophically, we're definitely chain agnostic. But it's got to be in a very resource efficient way. And so that's why I'm interested in at the moment what some other projects are building in the way of multi-chain infrastructure. So that if we could have Maple, which is able to lend to people on different chains, well, that would be fantastic. And I think that's where the space is heading at the moment.
So I agree. I agree with you. I think it's like the ability to.
One,
Sorry.
Sorry, I was just going to say one thing to add though is that what's really important is being able to find developer expertise. And at the moment,
Yeah. Right.
the development language that everyone's most conversant in on the blockchain is Solidity.
Yes. Okay.
So Ethereum's native one, but I think EVM compatibility is certainly helping here with
Right.
bridging to other chains.
We had the founder of Soulrise on the last week, and I was trying to get like a more conceptual or tangible explanation of some of the differences between coding and in
Yeah,
Rust or Solidity, because it's not my field of expertise. And generally, I'm more interested in the people, anyways. The
mm,
founder's ability to see opportunities or at least pivot points almost trumps the idea of whatever idea they have. Like you're
yeah,
changing so quickly, so often. It's like such a conceptual framework you have to build through. And to
yeah,
go back to the beginning of your point, I wanted to highlight as well that it may not even always be about the cost, but the consistency of the cost. Like you have transaction
yeah,
fees that vary wildly depending on the time of day it is. Like people would even prefer
yeah,
maybe to pay a higher amount, but with just a consistent number. Like,
yeah, yeah.
not that I
Yeah,
think that's a better
I
solution.
think
I
that's
just think
right,
it's funny.
actually.
Like a lot of
Yeah,
people might
yeah.
be
No,
okay with paying more. Like they're already paying like wire transfers. You're getting these great APYs. Like it's not necessarily a bad thing. It's just when you get this wildly fluctuating thing, and it feels so random too when you're going through the process. Like, I mean, because everyone
yeah.
wants to use it right now. You're like, we all have to pay more. Anyways, so the reason why I ask about the potential for scaling these is because of community building. At the
Mm,
macro level, these larger institutions, and I think they're right here at the doors as well. But one of the things I'm interested in personally or philosophically are like these kind of group community lending pools. This is something that's possible on Maple Finance, correct?
yes. So the way that Maple Finance works is that we have these lending pools, and these are smart contracts into which anyone in the DeFi space can deposit capital. So stable coins at the moment, and it's from these pools which our institutional borrowers draw their loans from. And what's unique about Maple's lending pools is that each one has a kind of manager. So we call this role a pool delegate. And this would be, a fund or industry professional who assesses the borrower and then agrees and approves the loan terms with them. So you can think of it, like an on-chain alternative lending fund. So institutional borrower who wants to expand their business in the crypto space. We've done loans to market makers, market neutral funds. Then that pool delegate who's assessing them and earning fees for doing so, and then anyone who wants to earn a yield from participating in this lending pool.
Yeah, perfect. Okay, so that's why I wanted to lean into this question, because I think it's really
Hmm.
interesting. You've got the institutions, clearly the capital layer, but I was also kind of seeing like this like these smaller community bases, like back in the community days, you've got a group of, I don't know, maybe
Hmm.
10,000 people in a city, and they all want to help fund a different part, like more of a municipal fund or something like this. What are the lines of let's say str- how, how does one quantify or qualify, maybe is a better word, the borrowers through scale, and is Maple aiming
Hmm.
at planning to introduce that level of scale for like the average person as a borrower from a group of people that they might be able to like what how do you connect those two worlds, or are you even going to try?
Hmm. So I think that was something we looked at. Um, that was something we looked at a long time ago, sort of doing like a greater volume of loans, but smaller individual loans. The difficult part we found there was, reputation, the credit worthiness of individuals. the level of work that would go into assessing an individual relative to a business, like it can actually be almost as complex as assessing a much larger business. And then the familiarity of people who would be earning a yield from this with that kind of asset class, consumer loans. And so I think that space can come to crypto, but it requires a little bit more in the range of technology and products there. So things like credit scoring, on-chain identities, and that kind of thing, I think will help facilitate that space. What we're doing is we're saying, let's start with the larger rocks. So let's focus on institutions. And the reason is that their reputation is really important to them to continuing to do business. So, they will identify themselves, they'll stake their reputation behind the borrow. They're borrowing really large amounts. So like the average loan in our first pool was like $2 million. So that justifies the amount of time that you spend assessing them, because there are sort of greater fees coming through the platform. And then from a risk perspective, it's much more defined what they're doing as a business, and they would tend to be a lower risk than the average sort of individual borrower. So we're planting the flag there. And I think as the technology and the other services in the space evolve, then it can, other people are welcome to help that proliferate.
Awesome. Sid, I'm sure the Bear family is probably already well upon their way to understanding why I would ask such a question. But have you ever heard of Kiva? We'll go there for a minute. Have you ever heard of Kiva? See, I
think it's super
love
interesting.
Kiva. This micro loan around the world, because there's so much locked up capital, and they've got this great default rate. A lot of the times I look at them like, these guys have such a great model for helping get capital to these entrepreneurs anyways, when I first started looking at Maple back in August, I was like, oh, cool. Because I'm constantly trying to envision like some of my original reasons for when I found Bitcoin, it included this open source technology for everyone. It's like, oh, great. The opportunity is leveling the playing field for everyone. So when I was first looking at Maple, I was like, oh, this community financing, these loans, I could see how Kiva could do this, because they're doing I think they've done $6 billion in loans with a 98% default rate. It's not, the small amounts of money add up over time for them. So I've always thought they're a great candidate for how some of this technology can benefit the larger group of everyone.
I think companies and organizations like Kiva with microfinance particularly highlight the benefit of credit creation in economies, because the people who are borrowing, they're using it for sort of farming and agriculture equipment, or small scale entrepreneurship, and like when they borrow that money, it's helping to create jobs, and it's helping to create economic growth in their regions and areas. So I think that's very cool. And I think, like Kiva and the Grameen Bank, and other lenders in those regions, like, Kenya, Nigeria, Latin American countries, you're starting to see more lenders in those countries that are developing the local expertise. And what I envisage is that in future, they might be able to borrow from the blockchain or from the DeFi space. And in that way, we could still help empower financial inclusion in these countries, but it's through a more indirect means of, say, lending to these companies that then lend in those areas where they have expertise, where they have networks, and where they have technology. And to call out another peer in the space, I think Goldfinch is another DeFi protocol that's starting to do some really good work in that space. Like they're lending fintechs in those regions.
Oh yeah, especially around education and the development of, as you said, the lack of kind of developer education here. There's a huge amount of opportunity for growth for people. So it's funny there, because we all love huge amounts of capital, hedge funds moving in. But when I first found Bitcoin and I found the sector, it was like the mushrooms. Most people weren't paying attention to it. It didn't have that capital allure quite yet when I first got here. It was like a lot of it was libertarian, like altruistic thinking, and I'm not I don't think that that's where the flag is planted. I think just in like internal and external exploration of what the worlds can do is much more interesting. But it was definitely one of the parts that always got me. So when I saw
Yeah.
the community type loans, I just wanted to let you know Kiva was like my first thought. So you've already been able
Hmm.
to secure or like to go through the process of qualifying these bigger institutions. What are some of the next
Hmm.
stepping stones for like because we know there's billions of dollars sitting on the sidelines that would be happy to sit on like 1 to 2% APY, like
Yeah.
and be super stoked. So
Yeah.
how do we get there? How do we get into that larger credit market macro picture that we kind of started off at?
Mm. Yeah, no, I mean that's a really good question, and that's kind of what I'm looking to see, and what Maple is looking to help create over the next 6 to 12 months is, can we start to bridge some of the traditional finance into the DeFi space? We're already seeing a lot of interest from both hedge funds, but also in particular family offices, which tend to have a more sort of forward-thinking mandate, and they're particularly interested in yield generating products. And so for us, I mean, we've just been expanding the team. We've just brought on like a head of capital markets, and we're starting to explore these kind of partnerships where can we educate them on how risk is managed in the space, because once they get comfortable with that, then that's when we'll start to see the first traditional hedge funds, traditional family offices start to participate in DeFi. And I should say we've already had a couple of family offices and more conventional hedge
Yeah,
funds
they're here.
participate on Maple.
Yeah, they're
Yeah,
definitely here.
they're coming. They're coming.
Yeah, no, yeah, no, they're here. They're they're
Yeah,
just they are just like any they're usually a little older, so they move a little slower or whatever. But they're here. Yeah, it's
yeah.
fascinating. So in a lot of people don't understand necessarily the complexity of that kind of qualification of investment to a lot of the times some of the difficulty here is we have these contractual smart layers that are
Mm,
interacting with the older regulatory layers. As we move forward, what are some of the like regulatory hurdles for these products that you see? Because we probably have a limited time where we can continue to have to then make another evolution of the way just DeFi or autonomous organizations work. What's the kind of what do you see for the future of not lending, but for maybe DeFi at a macro perspective, and some of the things that yeah are probably going to get again. It's a hard sorry this is a hard question because I'm also trying to curl in the fact that
yeah,
a lot of what we have to do is the same way when you buy something you're drawing contracts of and if people default you still have systemic risk. Like a lot of the downsides to the real world is still built into technology because we have all the downsides of the real world still existing. So
yeah.
how do you bridge those worlds as a regulatory question, I guess, and then what's the macro perspective of us in the future? Because I think they seem to coincide to some degree. Like we do something stupid and then we put seatbelts in the car, you know?
Yeah. Um, big question. I'll try and tackle it as best I can.
I
So I'd say
apologize. That was
starting
so
small.
abstract.
You've thrown a real curveball my way, but I'll let me see what I can do with it. So yeah, so the legal question, as you touched on, is extremely important, and this is because risk bleeds out of the DeFi ecosystem and it bleeds off chain into the real world. In our example, what do we do where a really large borrower were to default? Well, how we've tried to manage that is we've tried to wrap in enforceable wet legal contracts, so to speak, into the mix. So on Maple, a borrower would come onto the platform. They sign a master loan agreement, which enables them to begin using the platform and take out loans on the platform. Now, when they take out loans, those are represented as an on-chain contract, like an on-chain loan, which codifies the interest rate, the duration, when they make repayments, how much they borrow, any collateral, all that kind of thing. And then you have a wet term sheet, which is a confirmation that they would sign. So what we've got there is we have both on-chain artifacts and off-chain artifacts, but it gives us the ability, if a borrower defaults, to go and enforce through a court system or through arbitration. So that's where things are at the moment for prudent risk management. But where do they go? And so I think for efficiency, the technology is naturally going to shift more towards off-chain wet legal contracts being represented on-chain, because it's a natural step forward in efficiency. And then given that we're using blockchain technology for immutability, it makes natural sense that you should be able to have enforceable signatures from wallets controlled by both borrowers and lenders, or borrowers and pool delegates on the platform. So I think that's the natural step forward. And that then synthesizes starts to synthesize or bridge the legal system of society with the blockchain technology. And I think you'll start to see more and more of that. Projects like Open Law are really moving forward in this direction. And then also you can see that with DAOs, particularly in Wyoming, you've had a leap forward in the legislation there, which would enable DAOs in future to set up legal entities around themselves, which would then pave the way for DAOs and decentralized protocols to start entering legal agreements and interacting with the legal system. So I think that's super exciting.
Yeah, it's so interesting to see how some of it kind of falls together, because you're always you have to stay fairly cutting edge, because a lot of this smart contracts, the idea of these communications of value, I guess, would be, to distill it even further, just communicating value in the lines of that communication to come to an agreement of some kind. I've always been fascinated by how the real world will try to interact with these technologies as we move forward, especially because it's only getting more and more complex. Are there any unforeseen downfalls or pitfalls within what we're building that might concern you? Like where do you see a potential, like, of a car crash? I know this is so hard to predict the future of the unknowns. Like, I'm trying to ask you to do something which is obviously nonsensical, right?
Just
like, tell me about what's a gray swan in this sector?
I'm glad you used the term gray swan, because I was about to throw black swan out there, but it wouldn't have been manageable. Great. Yeah. Gray swan's probably more appropriate. So, well, I think, with blockchain technology, you have leverage. And so, like, having this single layer of infrastructure, which creates the efficiencies that we all love about the DeFi system, and the ability to aggregate really, really large amounts of capital, that leverage also creates inherent risks, because then if you have, if you have like a systemic shock or an unforeseen event, then it ripples throughout the system. And its effects can be magnified and can be nonlinear. So I would say, how that currently looks at the moment, though, it could be a massive hack. It could be, something to do with like the mining infrastructure. We're seeing shifts at the moment in Bitcoin's mining, the geography of Bitcoin mining, with a lot of miners leaving China at the moment. But I think what is important in both DeFi and the blockchain space is that we stay away early on from kind of getting any too big to fail entities, so to speak. So you can have risks, provided that they can actually be, dissipated throughout the system in a more manageable way. And that is by not letting any entity become too big to fail.
Right.
But the danger of an automated system like this is that everybody wants to bet on a winner-take-all economy. Everybody wants to think, okay, I'm just going to back the protocol that becomes the lender and becomes, tens of trillions of dollars in size. Well, what happens then if something happens to that lender? That's when you have like existential risks.
Yeah, it's fun too, because for me, I always kind of chuckle at the idea of Bitcoin maximalism, because I'm a concept guy. When I got excited about distributed systems, it made sense to have more distributed systems, not just one. It's not like, oh, there we have one distributed system. It's like, well, why not
Yeah.
have a bunch of these like this? We're removing systemic risk from centralized systems. That's like part of the fucking value of these things, guys. Like that's what makes it
Yeah.
so awesome, is removing centralized systemic risk.
Yeah.
Like, so let's have more, like not less.
Yeah. Yeah.
Just like from a conceptual level, there where people it's miss some of what, like, the core communication of value of the technology aside from the code itself. It's like, well, fuck, this is what I like about this. So, you went over two really important ideas there. Number one, I
Mm.
think that distributed systems by themselves, the fact that there's Avalanche, Solana, Ethereum, Bitcoin, all these numbers of
Yeah. Yeah.
variations of
Yeah.
people building new infrastructure, that we're kind of reducing the risk because a lot of it's locked up in different areas now. You've got, uh,
Mm.
anyways, the point of this, back to the
It's kind of
internalized.
like it kind of. Oh, sorry, I
Well,
didn't mean to interrupt.
that, I think that leads us into some of the black swan potentials, but the gray swan, I think, was
Mm.
you brought up some really interesting points as well, which is that a lot of the internal risks that we're going to deal with are kind of no, almost normalized risks that you would take anyways, like getting into a car and going for a drive. There's a bit more resolute sustainability to, okay, there's someone that's defaulting, we have to actually initiate
Mm.
wet contracts. Anyways, I guess I was appreciating your answer there. It was nice. Um, so because I'm not super tech savvy, and I try to view some of this from a really broad stroke perspective, I'm
Mm.
I often go into really abstract areas. What are some of the fun things about the last few years in building? Because again, we're fans of
Mm.
Maple. And my growing interest is in more in the people than the code, because I'm like, well, I'm just going to give up on trying to understand the code. I was going to try to understand the people as
Yeah.
best as possible. Um, yeah, tell me about your journey so far. That would, like, the experience. Again, I don't know how to say this question
Yeah.
without sounding like
Yeah.
a
Yeah.
hippie right now. That's not what I want to do.
Yeah, no, no, no. Happy to. I mean, it's been an interesting journey. So, like, I came from a banking and securitization background, and then I felt like I got a pretty good understanding of the space, but I wanted to see more what it was like building something. So I then went and joined a commercial lending fintech, worked there for a while, started learning about blockchain, and started thinking about the potential of managing debt and building a debt market on top of smart contracts. And that was also where I met my co-founder. And so that was sort of mid 2018. We started thinking about this. And then it was early 2019. I wrote the first white paper for Maple, which looked more like a tranche bond product, similar to like um, Barnbridge or Ondo, and which are two other DeFi protocols. And then it was through 2019 I started getting into the space, meeting people, and we built a very basic proof of concept, but we needed yield generating assets to go into these on chain on chain pools that could then be tranched out into these like senior mezzanine and equity tokenized bonds. And so then you go forward to 2020. We started early with a bit of a pivot. We looked at these pools and doing loans on chain, and then it was really, we weren't seeing a lot of interest in what we were doing, and there wasn't the VC appetite in the space. So we would have conversations with people, and they'd say, "Okay, cool. Like, start to come. Like let's keep chatting as you start to build traction," which was sort of another way of saying, come back later." And then it was really mid 2020 when the DeFi summer started to take off with Comp, and we could see that there was more institutional interest in the space, which was really got to like the backgrounds of me and my co-founder, which was institutional finance, institutional banking, and we could see that there was a natural product market fit here, where there were companies that were growing, that have good balance sheets, they're profitable, they have great runways, but they couldn't access the capital they needed to expand. And so that was where we really moved back towards what we had originally set out to do, which was this institutional capital market. And so then we raised seed in around September, October, and then we've been building out the team since then. And I would say, building the product and shipping the product has been great. We did our first lending pool in May of 17 million, and we've now doubled that. But a lot of the more interesting aspects have been the partnerships and building the team and trying to build a high performing startup organization. How do you structure it? How do you keep your people motivated? How do you navigate the trials of running a distributed team that needs to coordinate across 3 or 4 different time zones?
Yeah. You before we started and recording, we were talking about history, and to go back to where you started your sentence, your story was so clean cut compared to my high school dropout psychedelics music on the side of the road. Like you had, it sounded like you almost meant to end up here, whereas I ended up here totally by accident. My interest in like communications of wealth and stuff came from psychedelics. Very different interpretation of the same world. So it's always fun to have these conversations and try to ask not just normal questions per se either. Because again, some of the tech stuff, it's beyond me. But conceptually speaking, I'm like, okay, loans, interest, I can see it, finances. Like these are very simple railways of communicating line of value. Like it's not that difficult to understand conceptually speaking. So I think where you landed to the kind of the interest. That's where. I guess what it reminds me of is there's a few conversations I've had the last few months where I'm chatting with people and I'm like, God damn, our way up this mountain to this point was totally different. But now that we're closer to the top, it's like we're getting the same view. But the treachery or whatever, the early life stuff was sounds drastically different. You want to tell us about your interest in history and some of the topics outside of the blockchain that fascinates you as well?
Yeah, for sure. And I'll just apologize in advance. It seems like one of the neighbors in my building is doing a bit of home reno.
Playing very slowly.
Yeah. So I mean, I've always been interested in reading about history. Like I read a lot of biographies, but mostly I've been interested in kind of the history, like broader strokes history. So books like *Sapiens*, *Guns, Germs, and Steel*, and another book which was called why the West rules for now, which was looking at differences in social and economic development between East and West over a period of the last sort of 2,000 years or longer. But what struck me when I've read about history is the importance of institutions and organizations, and particularly involved in institutions and organizations. I've looked at things like the Royal British East India Company, and the history of financial markets. And what struck me was that with financial markets and the joint stock company, you really had this event which connected capital with entrepreneurship, and that pooling mechanism really unleashed a sort of Cambrian explosion in entrepreneurship and innovation. And what I'm very interested in now is this is one of the most major developments in finance and the financial sector that we've had in probably close to 100 years, right? And so one of the things it really enables is the aggregation of capital and redirecting it around the world to opportunities to which it can add the most value. And particularly the relevant aspect for Maple is, can we build a capital marketplace which enables enables an acceleration in progress by providing capital to companies that have tremendous runways and a great opportunity that they need capital to exploit.
Fantastic. I agree with you. I actually frequently try to remind people how crazy the opportunity is right now, especially from a venture or I don't know. I jokingly before we started this conversation, is you could call it's almost like the pronouns of the financial industry. I think it's almost unimportant. You can call it whatever you want, but there's basically asymmetric upside everywhere. It's fucking fascinating. You always see the memes, people comparing Bitcoin to Facebook after its IPO, but never
Yeah.
comparing Bitcoin to had you bought a Facebook in private early like seed or Series A or any of the early rounds effectively. And we've basically decentralized that entire platform. And you can enter from anywhere in the world, like generally speaking. Matic was one of these great examples where you have a 250x in motherfucking 3 years. Like that's what venture capital and private equity had been able to provide people that weren't in the general stock market. Like the stock market's almost the first and foremost giant fucking pump and dump. It's like, I mean, if we want to be rude about it, but sensibly speaking, the asymmetric upside, the opportunity that's here, the financial revolution, like the fact that we have a potentially totally productive ecosystem for the participants is wildly exciting. So I agree with you. That's why I'm here as well, Sid. So it was great to chat tonight. I'm glad we had the earlier preemptive call here as well. I could leave a little bit open because here's two questions for you. If you can, number one, would you like to? This makes it a little longer. I apologize. I like talking, so excuse me. If you want, do you want to screen share and maybe take us over the platform as well, and then leave us out with your social links? Is that a thing?
Yeah, I can do a brief screen share. Sure.
I should have preemptively given you that possibility, but
we do also actually have we do actually have a couple of videos live as well that I can link to as well, if that would be
first off,
that would be helpful.
All those links will be down below. We'll definitely we'll all your Twitter, all the Telegram, Discord, whatever you guys, we're going to make sure we grab those from you, and those will all be in the links down below. But just for fun, while we're here, it's your baby. I thought maybe you might want to show me around. It's probably a good way to do it anyways, instead of just getting people to go if they're still here, which I'm sure there's at least a few hundred. You want to show us around? We don't have to.
Yeah, sure.
I said, what are the proverbial fly by the seat of my pants right now? Like,
yeah, no, I'll just go to the app.
Yeah. What I'll do next time is I'll make sure when Daniel's helping line up these conversations, Daniel, remember to tell them to give us a product overview at the end of the video. That way we can see it. It's your baby. You've built it. Show us around. It'll be a fun part too. Makes these conversations longer. And anything we can do right now to be a little bit more sociable. Sid's in Australia, the more liberal part of Australia. So that's good. I'm still probably equally as locked down as I am.
Yeah, sure. Unfortunately, yeah. Yes.
Yeah, I mean,
I'll give a quick overview. So
I know I know I dropped one. I probably not the greatest thing to do in the middle of the podcast, but it's 2021 and things are super weird. So let's just go with it and be weird too, Sid.
Sounds good. All right, I'll just screen share quickly.
Yes, perfect. Thank you. Yeah, you have that. Yes, you do.
All right.
Yay. Awesome. There it is. Maple.finance.
So this is the app. So you can get to Maple. Here's the homepage. So app.maple.finance. You can get to here through maple.finance. So you just sign in via MetaMask. This is the page that would be most relevant for the average person. So this is looking at our liquidity pools. So currently we've got our first pool is up and running. This is the orthogonal trading pool. So you can see we did have 17 mil in loans that we'd done through the pool. And then we've just doubled the size of the pool to 37 over the last few days. And we'll be starting to do the second tranche of loans out of this pool this week. So that's why we've got 16 million there, and you can see the APY that's in the interest plus the Maple token rewards as part of the liquidity mining program. So this is just your first card. Next month we'll have our second pool, which we should have an announcement coming out about today. And so yeah, like that'll be how we start to scale things.
Fantastic. It looks great. Orthogonal, this is something about like lines or angles. Do you know? I don't remember what it was.
Yes, yeah. It's actually the name of our first pool delegate, orthogonal trading. But it's a very interesting name in the space because it means got something that runs sort of tangential, tangential from a point of origin. So in perhaps not in opposition to, but it deviates away from. So I think it's very interesting given the space we operate in, which is sort of deviating away from the traditional financial space in what is hopefully a new direction. So you can see we've got the Twitter page of the pool delegate, Josh Green, the managing director there. We've got a bit about the strategy that they're pursuing in the pool. And this is where, once we open up the second pool, that someone would be able to come. They can see the information about the loans in the pool. So this is 37 million in liquidity in that pool. We've currently done about 21 million in loans. We're doing the next 16 over the following week. You can see that we've already earned, so people who are invested in the pool have already earned about $150,000 worth of interest. With rewards, that equates to about a 38% APY. So that's about 11% interest, and then 27% in the token rewards. This is where I would go if I want to participate in the pool. So I can deposit stablecoin. I won't be able to deposit it now because the pool's currently full at the 37 mil cap. But what I would do is deposit here, and then I would stake the LP tokens that I get to participate in liquidity mining. And that's, like we've tried to keep it as simple as possible. So that's how people would participate and earn a yield in the pool.
So I guess while we're there, what's the MPT token? Can you explain the Maple token?
So this MPT token, this is the LP token in the pool. So it's when I deposit, I get back a token as a receipt, and that's the MPT token.
Awesome.
We have our native Maple token, and you can see the price there. And that's what you earn in rewards. What the Maple token allows you to do, this is our governance token of the protocol. But what it enables you to do is that you can stake the token, and that provides a kind of first loss reserve to a pool, which means that it provides a reserve which is drawn upon if there are defaults by the borrowers within that pool. So it draws upon the Maple token, liquidates it for USDC, and then returns that to the pool to make up any shortfall or any losses from those defaults.
Oh, great idea. Like almost like a little bit of a built-in insurance protocol.
Yeah, it's almost like it's almost like a cross between kind of insurance or almost like a credit default swap, because it then also earns a portion of the fees. So it gets like a leverage yield from providing that protection. So that's the way that you participate in the fees generated through the platform by using the token.
Awesome. Yeah, this is great. Yeah, this was definitely a good idea. I'm gonna have to make sure this is a question for all podcasts moving forward.
Yeah, I love it. Put me on the spot.
Yeah, I should.
Hopefully,
well, next time we'll know. We'll ask ahead of time so we don't have to drop it on you like that.
Well, I was gonna say next time hopefully next time I come on, there will be a lot more pools that I can show you on this page.
No, it's fantastic. Again, Sid, one of the fun things for me is that the Bear family in general, but me specifically, because I can only speak for myself, I like trying to find new and interesting things, right? I don't want, once they're already super hype and you've got a shit ton of thing on the page right now, it means I wasn't doing a good job.
You want to you want to skate where the puck is going.
Yeah, well, yeah, exactly. Part of that conversation too, just because I think it's fun, and I think we'll be able to, and I agree. The next time you come on the show, the frequency of these ideas is a growth takes time. All these fun things take time. So, I equate it to like you take, I think the last time we talked too, we were chatting about like mushrooms like lion's mane and reishi. Is that correct? You take lion's mane
Yeah,
and reishi?
yeah.
Okay, see, I
I
remember.
yeah, I haven't taken it in a while, but I was I was using, I think it was lion's mane and maybe chaga.
Yeah,
Like
August.
I'm sort of interested in the idea of nootropics and enhancing your cognitive performance.
Yes.
Do you take them as well?
I drink chaga tea every day. Um,
Yeah,
I love the it's the immunomodulatory effects I'm most interested in with the tea at the moment.
yeah.
But I agree with you. I have a lion's mane, a cordyceps mix that I put in my smoothies. So the reason I
Yeah,
brought up
great.
mushrooms is, and I remember that we'd both had a conversation about it back in August too, mushrooms in general, is that there's a lot of really valuable things that people overlook.
Hmm,
The turkey tail mushroom, chaga, or this mushroom here, or the chaga mushroom, is one of these
hmm,
things that I feel a lot of people overlook. And you know, in the scientific field, it usually takes time for some of the fringe or the really interesting stuff to gain the popularity that it deserves. And I've always kind of I like finding those really valuable things before everybody, Sid. So
yeah. You want to. It's like the idea of having kind of an edge or secret knowledge.
well, not secret, no, maybe, see, because it's not, well, there's, yeah, the arcane idea that like that
Yeah.
there there's a veil around Bitcoin that was really interesting to me that had nothing to do
Mm,
with the future potential. Like I jokingly, or not jokingly, in 2017, Bitcoin's at $1,000. I'm like, Bitcoin's going to $6 million probably by
mm,
2027. That was my rough guess. And those are
mm,
bold statements, and we were nowhere near that when we were at $1,000 in 2017. Like that was like,
mm,
are you just, how far off are we? And what I've realized more and more
mm,
too is my interest in these really abstract things, usually highly technical, highly conceptual, where the art, or it's more art than science. Quite frequently, it's
mm.
the people who are tinkering and building.
It's a tinkering. Yeah.
Yeah, that's where I find myself akin with as well, is with the people that are making stuff more than writing academic papers about it. Now
Yeah.
sometimes you get the nice blend between those, like Emin, the co-founder of Avalanche, etc. But I had a
Yeah.
great time chatting with you tonight, and we will do it in the future. And I believe the page is going to be filled out with many more loans, but not before we, not before we get to have these conversations. I want to make sure we're some of the first
Yeah.
watching the growth of this stuff, Sid, because I think it's fascinating, and you are correct that this is a huge opportunity. So thank you for taking us through that overview as well. I think this is, I'll ask that question from now on from people that are building stuff. It just makes sense. You know it better. You'll be able to show it, make
Yeah.
a brief explanation. And for all the social media links down below, Maple Finance, ladies and gentlemen, Sid Powell. Thank you, Sid. We'll do this again soon.
Thank you so much for having me, and it was great to chat with the Arcane family.
Awesome. Thank you, ladies and gentlemen. Thumbs up, comments down below. You know the drill. Retweet, like, whatever, all that fun stuff. See you guys in the next episode.